Today, I want to kind of focus on one thing, which is an example of a current client that I was working on, and they want to take advantage of a tax benefit of selling their home and then getting a replacement home, but transferring the tax base along to the new home so they pay less taxes. So, my job, again, is to not only find you a new home, in this case, but also help that client save some money on their tax base. So again, I'm not an accountant. You definitely should be talking to your accountants regarding this, regarding the $500,000 and $250,000 tax base, which you can save based on capital gains of the property, but that's a completely different topic. So again, what we want to stick with today is actually the Proposition 60, Proposition 90, and 110, which have to do with you. If you are over 55 and you want to transfer your tax base, you can do this one time to a replacement property. So we'll use as an example your original property you're selling, and then you have your replacement property. Now, to be able to qualify for this right now, there are other counties that this needs to be done within. So if you're within Orange County, no problems. If you sell your property, get a replacement property, all within Orange County, that's Proposition 60. Proposition 90 allows you to actually go to other counties: Alameda, El Dorado, Los Angeles, Orange County, Riverside, San Bernardino, San Diego, San Mateo, Santa Clara, and Ventura. In 2019, there also may be an addition or an amendment to Proposition 90, which will allow it to other counties within California, but as of right now, these are the counties this rule will apply, or this proposition will apply to. So again, if you have a property where you've been into it, let's say 5, 10, 15 years, and you have a low tax base, and if you were to buy a property that has to be of equal or lesser value, you can transfer that lower tax base over to the replacement property. Now, the rules for this, got to be 55, 55 or older. B, the replacement property has to be of equal or lesser value. So if you buy a $1 million property, you should maybe buy a replacement property if you want to go up to that number, but not quite. Buy it at, let's say, 909 and a quarter. Then you can actually qualify for this one-time tax-based transfer. Now, also one thing you need to know, the assessor has their opinion of value versus market value, which is what it actually sold for. So a particular property, whether it might be the original property or the replacement property. So make sure that you don't cut it too close when you sell your original property and your replacement property, and you get into that, because if the assessor has their own evaluation and it's off, you might not qualify for this transfer. So make sure when you talk to your agent, like myself, we know how the tax-based transfer works, and make sure that we actually get you into the right property so you can take full advantage of this tax-based transfer, which you'll save money on the rest of your life. So again, as I said, you gotta be 55, it's gotta be of equal or lesser value. One time only. Can't do it 10 times, one time only. Now, this is interesting also. You can feasibly, the next rule would be 2 years. So unlike a 1031 exchange, where you have to sell your original property and then get it into escrow, and while you're in escrow, you have to identify up to 3 properties within 45 days and then close within 6 months. However, with this tax-based transfer, you have 2 years to complete it. So that's kind of nice. So you can either sell your property, your original property, and then buy a new property, and then you will get an application from the assessor, or I can forward to you. You submit that after the sale, actually after all the properties are purchased. So once the new property is purchased, you can basically take that information, fill in your application, send it to the tax assessor. So as long as all that's done within 2 years, that's perfect, you're good to go. You can also buy the replacement property as long as it's less or of equal value to the original property prior to selling your original property. So again, as long as you're doing this within 2 years, you're okay. As long as you're doing this within these counties, for now, you're still okay. So there's quite a few benefits to owning homes. As you know, you have write-offs. You have also, don't forget to take advantage of the $250,000 and $500,000 tax exemption, which you can take based on capital gains, and you can do that once every 2 years. So again, make sure you know what you're doing when you're selling your home. Make sure you know what you're doing when you're listing your home. I see a lot of local agents in some of the areas where I sell at. They overprice properties by $200,000 to $300,000. Currently, I honestly believe they're leaving money on the table for their owners by doing that. But again, smoke and mirrors, people. Definitely talk to your agents. Make sure they know what they're doing. Make sure they have the experience that will quantify into more return for you. So again, my name is Patrick Schwer, the Schwer Group and Remax Evolution in Newport Beach, and I would be happy to help you. So definitely call Patrick. Here's my number, 714-401-0893, or patricksellsrealestate@gmail.com. Thank you. Have a good day.